Hey, thanks for joining us today on Uptime Logistics. Of course, it's powered by Cap Logistics, and I'm your host, Doug Draper, with the Denver Transportation Club. And today we have a great topic with a very knowledgeable guest, and we're excited to have John Duncanson with us. John, how you doing?
Just fine, thanks, Doug. How are you?
Good. So John is the Executive Vice President of Corton Capital, and he's involved with the Timber Analyst in the Corton Global Timber Fund. So, John, what we like to do on our shows is learn a little bit more about our guests. I just spurred out a whole bunch of words and a whole bunch of things related to your business, but obviously you can tell our audience in more detail. So give us a quick snapshot of yourself and kind of how the business and the Corton Global Fund got started.
Okay. Well, thank you, Doug. I'll start just very briefly on my career. I'm located in Toronto, Canada. I'm actually calling it from my home office, as most people are working out of these days. So I'm surrounded by concrete. We do have some trees in the backyard, but I am a professional forester, just a different location. I've spent close to 45 years in the forest industry, both working in the industry, where I started from. I am a professional forester, but for the last 35 years of my career, I've worked in the investment and finance industry, but all specializing in forest products, timber, and lumber. When I did work in the forest industry, which was way back when, in the late 70s and early 80s, I went through the ranks fairly quickly. I started off in lumber sales and worked my way up to becoming vice president lumber sales of what was the largest lumber company in Canada and one of the largest in North America. My real claim to fame was back in those days, most lumber was produced by sawmills and sold to wholesalers. We didn't have the big home centers that we all have now. They were just starting out, and one of the reasons I got promoted to vice president of sales was I went to a trade show in Atlanta and met with a group of people that were coming from a company called Home Depot, which I had never heard of before. We got to know each other quite well, and they said, "Why do we have to buy through wholesalers? Why can't we just buy directly from the mills?" And I took it back to my boss and almost got fired for even suggesting that how dare we go around the wholesalers. Anyhow, Home Depot, I convinced their credit manager to actually give us a line of credit for Home Depot. As soon as we established a line of credit, it was a couple $1 million, which was a drop in the bucket for them. They started calling in orders. I placed an order of 100 railcars in 1 hour. That got the attention of the people at the sawmills, and they said, "Hey, who's this guy Duncanson? We think he should be running the show." Anyhow, that's how I started. But in my experience in the forest industry, led to my get lured into the investment industry, the finance industry, and I've worked as a forest products analyst with two of Canada's largest brokerage firms. And I also did a 10-year stint at the Chase Manhattan Bank, believe it or not. Even though I was based in Toronto, I was reporting to New York City. That gave me a chance when I was working at Chase to basically travel the globe, and we did financing for pulp mills and paper mills and sawmills all over the world. So, anyhow, so that's just my career. My partner and I started up Corton Global Timber Fund in 2019, so we're not quite 2 years old yet. But what we recognize is that for the average investor, there was really no way to play in the invest in the forest industry other than just buying a stock, buying one particular name or two, like a Weyerhaeuser or a Potlatch. So we realized that there were only two timber exchange traded funds, or ETFs as they're known, in North America, but both of them were passive. They just basically held stocks. They didn't actively manage it. So we created the Corton Global Timber Fund to capture that ability to actively sell units in the fund to the public investors on an actively managed basis. We don't buy and hold. We actively sell. We can short stocks if we think if we feel it's necessary. Needless to say, with the higher commodity prices, it's been our performance has been exceptional. We're up year over year. We're up over 50%, and that's a pretty attractive return for the average investor. And we only invest in big, liquid forestry and lumber companies, so that we have the liquidity, so we can you can buy and sell the fund as if it was just a normal security.
Yeah.
So basically, that's my background, Doug.
Nice. Yeah. Well, with experience is what you told us and our audience, and activity, it is certainly going crazy right now, which kind of leads us into the topic of the show: is what exactly is going on with the lumber shortage, the soaring prices, and kind of most recently, kind of the market correction that transpired. So, yeah, give us, there's 3 questions in there for you, right? What's going on? Why the soaring prices? And then we've had a kind of correction in the last couple of days. So maybe we'll just start there.
Okay. Well, let's deal with the first part of your question, Doug. The answer for the reason why we've got a lumber shortage and why we've seen soaring prices over the past 9 months, basically, is just as simple supply and demand. North America, in particular, the U.S. housing market has been on fire. If you look back from '96 to 2006, the housing market in the United States and in Canada, for that matter, were very similar to the U.S. Was very much overbuilt. In the U.S., we were building upwards of 2 million houses a year. So we were outpacing the trend line, which is roughly about 1.5 million starts a year is the trend line. But since 2006, the housing industry in the U.S. in particular has been grossly underbuilt. And annual housing starts have actually lagged that 1.5 million housing trend line. And so, some of the lean years, especially during the housing crisis in the 2008, 2009, we were building well below 1 million starts per year in the U.S. So today, we estimate, and saying we, it's analysts as well as everybody in the industry, including the home builders, we estimate there's a pent-up demand from that gap from 2006 of about 3, maybe 3.5 million starts. So you couple that with the fact that now that we're getting back to a trend line, because the latest housing starts are running at 1.5 million, 1.6 million, you have this backlog of pent-up demand as well. So that's on the demand side. On the supply side, what we've seen, and a lot of people don't realize it, and the market really doesn't recognize it quite yet, is that we've seen literally dozens of sawmills permanently closed since the financial crisis back in 2008, 2009. We've seen the majority of these closures have happened in the 2 largest lumber producing regions in North America, namely the Pacific Northwest of the U.S. We're talking Oregon and Washington. And in Canada, it's the province of British Columbia, directly north of Washington State. So those we've literally got, I think the last count, there's something like 35 fairly well-sized sawmills that have been permanently closed. So that's basically the answer to your first part of your question, Doug. And then if you want to, what was the next part? Was
no worries. So I want to jump in. You made an interesting point about the closures. Most Canadians and Americans are like, okay, well, my world was closed for an entire year in 2020.
Yep.
I get it that the sawmills were closed, but I think, what about, the climate changes, environmental concerns? Because here in Colorado, we've, last probably 10 years, there's been a pine beetle infestation that's just been devastating to the Colorado mountains and things of that nature. So I think it may be counterintuitive to say, hey, closures, yes, there were some closures COVID related, but I think it goes well beyond that. Talk about the environmental and kind of the climate changes that had an impact on the mill closures.
No, that's a very good question, Doug. And when I refer to closures, these are permanent closures. These aren't temporary. These mills have been shut. The towns, unfortunately, the workers have been moved on. The equipment, if it had been any good use, has been repurposed to other mills. But you're right on. I'm not a big environmentalist, but I do believe in climate change, and those two areas are intertwined, and they have been the primary result of these permanent closures. They've all added to falling wood supply, I should say. You pointed out the mountain pine beetle, which devastated a large portion of the forest in northern Colorado. There is no wall between Canada and the U.S. It's probably the most open border, but as far as bugs are concerned, they fly. And even if there was a wall or even a big mesh, it wouldn't have kept them out. And it moved into the pine forest, lodgepole pine forest, primarily in the interior part of British Columbia, which is the biggest lumber producing region in Canada. And it started moving up there in the late 1990s, and it really took off all through the early 2000s. And you can't kill the beetle. The only thing that kills it is nature itself, and you need sub 40 degree weather, whether it's Celsius or Fahrenheit. It's still 40 below. You need that in very cold winters. The problem is that because of climate change, we've had abnormally warmer winters, and so the female beetle has actually been able to hibernate safely inside the bark of these pine trees. And come spring, when the trees start growing again, the mothers come out. They've laid all their eggs, and the infestation has just been horrendous. Every third tree in British Columbia in the interior is lodgepole pine, and over 90% are dead. There was a great rush by the industry to consume all of those trees before the wood got decayed and was not being able to be used commercially. So we did have a spike in lumber production as mills hurried to consume all that timber because it's a valuable resource. The beetle's run its course; it's all done, and so we're starting to see. We've seen these large number of sawmills that have been closed because of the lack of timber. So that's why they're not coming back on again, because how do you run a sawmill without timber? In the Pacific Northwest, you've had environmental factors, and there's big ones happening right now as we speak with this huge heat wave that's going on in Oregon and in Washington State. We're seeing wildfires. We had some really bad ones last year. We had some huge ones in BC 2 years ago. The whole province right now in British Columbia is on massive fire alert, as is large portions of Oregon. So we're going to see further destruction of the timber base because of the wildfires, which can be, getting back to your point, can be directly tied to the climate changes. So
yeah, it's catastrophic. I know a lot of our listeners are in Colorado, but for those that are not, I mean, it's just, my wife and I love to do cross-country skiing, and we've been in forests that were so densely populated that were just amazing opportunities for skiing, and now they're just wide open spaces. It's just it's absolutely devastating. So I know that the natural and environmental impacts we just spoke about, but going back to COVID, and the demand side of things and the consumption, the absolute craziness of how people are consuming things in droves right now. How much of that demand is related, just to COVID and what I just spoke about as far as the demand? It certainly has an impact, but it is really recent. Has that moved the needle a little bit? Talk about that.
Yeah, that's another very good question. As we're hopefully getting out of COVID with the vaccination levels increasing, we're finding out more and more what really happened back in that sort of May, June, a year ago period when we didn't even have there were no vaccines. Everybody was working on trying to develop one. But what happened on the demand side was that a lot of whether you were in Canada or in the United States or even in Europe for that matter, the stay-at-home orders came out, and people were stuck at home. They had to fix up their basements. They had to build home offices. And so the demand for lumber and other building materials really skyrocketed as a result of COVID. The home centers, it happened in Toronto and Canada as well as many parts of the States. The home centers, the Home Depots, were actually deemed as essential businesses and remained open. So it wasn't a lack of supply from them. It was just the demand that could not, the supply just couldn't keep up with it. And then on the supply side, many of the sawmills, whether it was in the United States or in Canada, had COVID outbreaks. And if you had one or two workers on a shift at a sawmill that tested positive for COVID, they'd have to shut the whole shift down. So there was a lot on the supply side. There was a lot of COVID-related downtime that was taken. So it created an enormous bottleneck. It drove inventories in the field and at the mills down to almost zero, and that's supply demand coming again, and that's why prices that at that time a year ago were trading at around $300 1,000 board feet. Now 1,000 board feet for your viewers, just picture a forklift load of lumber. That's 1,000 board feet. So when a forklift is at the building center and you're putting it in the back of your pickup truck, that's $300 worth of lumber. So the prices, though, have gone from $300 to $1,600. And we'll touch base later on what's happened to the meltdown in prices we've seen just recently. So, but as we're finding out now, as people are starting to get back to normal, we're seeing the do-it-yourself business has sort of dried up a bit, and it's largely price related because the prices just got so high that people said, okay, I can put off that deck now. And we're in the summer period. People are saying, okay, we can move, we can go to the ball game on Saturday, don't have to work in the basement of the house, we can, so there's a myriad of reasons. People are coming basically out of hibernation. But the boom in the do-it-yourself and home renovation market is not just COVID related. You got to peel back the skin of the onion a bit further, and you'll see that a lot of the do-it-yourself projects have been put off for years and years. I'll get around to fixing up that fence. I'll get around to fixing up the deck. But the bigger renovations, the add-ons to houses, and the complete remodeling of existing houses, has been basically delayed by COVID because you couldn't get contractors into the house. You couldn't get the plumbers, the electricians, and now they're getting back in there. And so I expect to see the do-it-yourself and renovation market to really start to be a very strong boost going forward here. The number one indicator I use, Doug, is that you take a look at the average age of the house in the U.S. Canada is very similar, but in the U.S., the median age of a house is 43 years old. So you've got parts of New England, the houses are over 100 years old, and you've got, the average is 43 years, and like most things, after 43 years, you got to fix them up. And the other thing I'll point out too is that a lot of the older houses were built were built on a smaller base, and people these days like to have a larger house. People want to build home theaters. They want to build proper rec rooms and things like that. So a lot of the houses that are older are actually going through substantial expansions.
Right.
It's easier. It's a lot cheaper to expand an existing house than to build a brand new one now. And then the other big point, Doug, that's really happening is that the millennials, so the 30 to 35-year-old cohort, is now moving into what has been the historic first-time home buyers. So the outlook, if you read any of the home builder reports, they're all very positive on the household formation and family formation and new house buying. And so we're entering a period where this is going to be a very strong demand feature going forward for the next 5 to 10, 15 years. So.
Interesting. Yeah, that's
and then
great.
the last point, don't want to go on too long about COVID, but we're now starting to find out, and the statistics are showing it to us now. And again, I'm using the Commerce Department statistics from the most recent housing starts. The COVID has forced people to stay at home, but we're now finding out in many of the big cities that a lot of the employers are now willing to allow their employees to work from home. So there's this movement by many North Americans to relocate to the suburbs. Has been sort of pent up, I believe, and is now been sort of it's the genie coming out of the bottle, basically, which was led by COVID. So people are going to now adopt a more modified work from home schedule. It may not be the full week, it maybe it's 2 or 3 days.
Right.
So this is really translated, and it's very noticeable in the statistics. And if you just pull the most recent statistics from the U.S. Commerce Department, you'll see an interesting thing that the level of single-family housing starts, which has traditionally run at 65 to 69%, the other percentage being multifamily, being condos and apartments. But 70, it's been running so far in 2020, most of late 2020 and all through 2021. Even though it's a big increase, it's now running at about 72% of all housing starts are single family. That's significant because obviously a single family house, as opposed to a concrete apartment or condo unit, uses a tremendous amount more lumber. So we're seeing this another phenomenon, and it's a result of getting back to COVID. So do you think, if you were a pessimist, you'd think, okay, everybody's going to go back to working downtown and everybody's going to start commuting again? And I don't think so. I think you're going to see, I know that the Harvard University has put out a big study on this. It's an interesting read, just released, and they come out with the statistic. They think that only as much as a third of the workers that worked in downtown cities are going to remain at home. So, in other words, 60 or 65% will actually go back to the office. But so that's a significant number.
Yeah. Yeah, whenever you break it down to the silos, the different factors, it makes total sense. You had the environmental factors and things that had nothing to do with COVID that we're building. And you have COVID with the shutdowns. And then you have the way that people are engaging and using their homes differently as a reaction to COVID. And they're engaging with their work differently. And I think there's plenty of people that were tired of having their kids in the background trying to do their work on a kitchen table. So you have this pent-up demand and everything else. So when you lay it out there, it makes total sense.
And we do have low interest rates, too. This is the other key thing to look at.
That's so crazy because, as an analyst, and that's your profession, I was literally about to say that, is that money, I wouldn't say it's free, but it's about as close to free as you can get. So I know that it's like, I don't know, we use a perfect storm analogy because that's overused, but what we're talking about is trending to that. So we're talking today with John Duncanson. He's the Executive Vice President of Corton Capital. He's a timber analyst within that global fund, and we're really getting into the weeds here in a good way with what's going on with the with the timber industry. So here's a question I have for you, John: is that the price, it's a commodity, and the price shot up, and then now it's dropped back down, and talk a little bit about that, like how. I mean, we talked about why it soared. Why did it come down so quickly? I mean, even in the time that we've been talking, and you look at a daily trends, it was total chaos, and the price was 1,600 board feet, and now it's more down into the 800s. Why did it drop so quickly, even with all the factors that we just laid out?
Yeah, it took. I was expecting some pullback, but not nearly as much. But my portfolio manager on the fund and I did say when we started seeing the prices at 1,600, we were forecasting $1,200 prices. When we saw 1,600, we're just waiting for the air to sort of a little bit of the air to come out of the balloon, because they went to 1,600 at the end of May, and as you point out, they have come back down. And as of last night, the Random Lengths, which is the bellwether reporter of lumber prices, published 780. So they basically, in the last 4 weeks, have come off by $800, like they've halved, come off by $800. Just looking at the reasons why, there are two reasons, in my opinion. We touched a little bit on this before, but the record high prices and the sticker shock, as I call it, turned off, didn't really turn off, it delayed many of the do-it-yourself projects. And so people that were looking at building in addition to their house saying, it's crazy, the prices are so high, let's wait and see. And so as you get more and more business reports coming out, look at how fast lumber prices have come off. I mean, $800 drop over 4 weeks is significant. It took 9 months to go from 300 to 1,600, and it took 4 weeks to go from 1,600 back to 800. So number one is that the do-it-yourselfers have been delayed and turned off. And if you look at how much lumber is consumed and where it goes in the United States, historically and even up until right now, 40% of all lumber consumed in the U.S. goes into repair and renovation, the do-it-yourself market, but repair and renovation. So big repairs and renovations as well. So 40%. So basically, you've delayed 40% of your demand. But as I've pointed out, my experience in the lumber business is that once a bottom is felt in the price, the do-it-yourself projects will resume, and they'll resume probably at a faster pace than what we've been seeing over the last 12 to 18 months. And another point that I haven't seen anybody reporting on this, other than the large home builders that I talk to, because we do have the ability to buy shares in home builders as well too. Even though it's not really a timber name, we do have the ability in our fund to buy some of the larger home builders and play that, and we've done very well on that. But what has happened traditionally, the big home builders when they traditionally purchase wood products, and we're talking truckloads and truckloads of lumber, plywood, oriented strand board, which is a substitute for plywood. They usually buy it in a 3-month pricing regime. So you imagine a brand new subdivision that a builder is building, 600 houses. He'll lock up that supply for 3 months, and it's largely so he knows where his costs are, and of course, and can work out his profitability, can schedule his workers and stuff. Now that COVID's over, we're getting back to more normal house construction stuff, but this extreme price volatility we've seen, particularly in lumber, but other building products, doors, windows, you name it. It's not just been the volatile pricing, it's been the volume availability, because Inventories are non-existent. They got drawn down to absolutely zero. So the home builders faced with that situation have changed their buying patterns. Whether it's permanent or not, I think it's temporary, but they've gone now to a monthly one. So if you buy a new house in a subdivision, you're going to find all sorts of fine print where if the lumber prices go up, you're on the hook for the cost of the change in the price. So this is sort of a knee-jerk reaction. I think it's temporary. I think as we get back to more normal supply situations, we'll probably see the builders go back to buying longer term. But just getting back to the first point, the do-it-yourself projects have really pushed the big home centers like the Home Depots of the world. Basically, are saying, "Hey, we're not getting the traffic for lumber anymore, so we're gonna." They don't buy inventory. They don't sit on inventory. So they're just in time. So if they're not selling truckloads of 2x4s on the weekend, they're not replacing them. Once the do-it-yourselfers come back to the home centers, they'll be buying like crazy. So anyhow, so that's basically what we've seen in the last 4 weeks.
Yeah, interesting. With Uptime Logistics and the transportation focus, I wanted to say when there is demand, right, people are going to find what they need in other markets. And I know that their trees are grown and there's mills and things all over the world. So if I need more lumber, I may look at other parts of the world, right? And so one of the obvious things is what's going on with increased lumber supply in Europe, right? Hey, there's a lot of lumber in Europe, but the ocean container, the supply chain, the imbalance of equipment could really throw that into a whack because, hey, there's lumber in Europe, let's get it over here. It's not as simple as that anymore. So talk about the increased lumber supply from Europe and what that's doing for the equation here.
Yeah, well, it's a good observation. And the one thing about the lumber industry, just as sort of a side note, is that there's a tremendous amount of statistical information. You have to know where to look for it. But both countries, Canada and the U.S., keep very detailed record on imports and exports and stuff, and of all products. But lumber, it's very easy to track it. And it's very easy to see where supply is coming from. We know how much lumber goes into the U.S. and how much the U.S. buys from Europe. And you're correct. Europe is a big forested group if you put all the countries together. And it's not just the Swedens and the Finlands up in the northern. You got extensive forests all through Germany and France too. And they build houses a little bit differently than we do in North America. It's probably more brick and mortar, but the lumber, the sawmill industry in the housing industry in Europe is very healthy, very strong, and it's almost similar to what has happened in North America, COVID related. They probably don't have nearly as much do-it-yourself business. You don't have the massive home centers, like they're not big Home Depots over there. They have the equivalent of Home Depots. But anyhow, just getting back to your question, I looked at lumber shipments in the U.S. From Europe are reaching sort of all-time highs. We're at the current numbers. It's about 4% of total U.S. lumber consumption is supplied by Europe, up from historically around 2%. So it's relatively a small percentage, but it's still a fair amount of wood. And with the $1,600 lumber prices, it was a very attractive market. But what's happened now with the fall off in prices, we're going to start to see, and with the continuing strong domestic markets in some of your big European countries, you're already starting to see the sawmills in Europe turn the tap, and they're saying, okay, we're not shipping any more into the Boston area. We're going to Frankfurt again. on the logistics side, shipping lumber from a southern U.S. sawmill to a Home Depot in Atlanta is a lot less complicated. You call up the trucker and you truck it. You're shipping from Central Europe into the northeastern seaboard of the U.S. You got to truck it to the port. You got to load it in containers. You got to get the containers on the ship, and you've got to unload the containers, reload the truck. So logistics do not play very well for the Europeans. So $1,600 lumber prices, let's sell everything we can make into Boston. $800, forget it. We lose our shirt. So there's a bit of a that'll tighten the supply up, I think, as we go forward. But the one point that we kind of skipped over here, Doug, is that the new sawmill capacity. I don't know if you were going to ask about that or not, but if you go back over many cycles, which I've lived through, when you get these tight supply-demand periods, the number one knee-jerk reaction is, okay, let's go out and build another sawmill. Let's build sawmills to meet the demand. But as we touched on, you cannot make lumber if you don't have the tree. And all the environmental and all the climate change-related permanent closures of sawmills and the shrinking timber base, we're not running out of trees. We're just running out of commercial forests that can support the construction of new sawmills. I've got a list of the new expansion sawmills that have been announced with these higher prices, and it's a drop in the bucket compared to what we normally have seen, and it's largely related on the fact that we have a reduction in the timber base, particularly in British Columbia and the Pacific Northwest. There's still ample timber in the U.S. South, but the problem that the industry in the U.S. South, even though the trees grow faster in the U.S. South, is that they're running into, like a lot of industries, they're running into labor shortages. It's not COVID related. This is like they really don't have the skilled workforce to work in a sawmill. A modern sawmill is not like you picture a big circular saw cutting logs into boards.
Right.
It's all highly automated. Most of the men that work or women that work in a sawmill don't even get out of the air conditioned control room where they're pushing buttons. Everything is done electronically, so you need a very technically skilled workforce. The other big thing that people don't realize, particularly when you're following it in the stock market doesn't follow these small in the weeds things, but I do. And one thing that has happened with the overbuilt housing that we would identify from 96 to 2006, that 10-year period, is that when it was overbuilt and resulted in a lot of closures, some of them temporary closures of sawmills, the industry that makes sawmill equipment went through a major downsizing. We only have 2 companies left, believe it or not, in North America. If you wanted to, if you had $250 million, which is the rough cost of building a brand new world-class sawmill, your biggest problem would be finding out how am I going to build it. You just can't call up anybody and say do it. So I've checked with the largest sawmill equipment manufacturing group, which is based in British Columbia in Canada. They have built 75% of the new sawmills over the last 10 years. And these have been retrofits, modernization, but greenfield mills where you're actually taking a field and building a brand new mill from scratch. Their dance card is fully booked. Yeah. They're building 3 mills right now. They've just signed another one for in the state of Louisiana, but they're building 2 in Mississippi. They don't have the skilled technicians. They got steel problems, steel supply problems. So what should be a normal case of building new capacity to meet the demand needs is just not going to happen. This will happen over time, but it takes 18 to 24 months to build a brand new sawmill. So by the time these new mills that are being built as we speak, they won't be putting lumber onto the market till 2023, 2024. Wow. So we are getting into another perfect storm here. So, and if you get the Europeans pulling back, even though it's a small number, I think supply and demand is going to get very tight again here in a short while.
Yeah, it makes sense. The great thing about the logistics and supply chain industry, at least nerds like myself, everything is so intertwined, right? Because the average consumer is like, just make more 2x4s, right? And so simple. Sitting there looking in your backyard, saying, why don't they just make more? It's not as simple as that. And you're right, you can't just pop up a safe, effective, efficient sawmill overnight. The other thing that we spoke about that's a good indicator before the show was kind of about the relationship between railcar loading. And I know there's a great slide it's not a complicated discussion, but this is a great visual that we could see that kind of walks us through how railcar loadings impact kind of the supply and demand. So I don't know. Why don't you walk us through that slide if you don't mind? That'd be a good.
Okay, this is a leading indicator I've been using for years, and I don't think any other analyst looks at it. So I'd be interested to see if anybody copies me on this. But
I was about to say, you're giving away your secret sauce here. John. Be careful.
No, I use this in presentations to potential investors in our fund. So the CNR, which is the Canadian National Railway, which is the largest railway in Canada, one of the largest in North America, and when they get the Kansas City acquisition done, if it's allowed by the politicians, they will be the largest rail line in North America. Most of your sawmills in British Columbia, which is Canada's largest lumber producing province, are connected by rail. You don't truck lumber from northern BC to Dallas, Texas. It goes by rail. So CNR publishes on a monthly basis. You just go to their investor page, just click on that, and you get the railcar metrics. So the dashed line on this chart is actually, I've combined them. I've put it to monthly. I go back to 2016. I could go back even further, but you can see the ups and downs. Some of it's seasonal. You get the winter delays, frost loads, snow, you name it. Mm-hmm. So there's a seasonality on it, but you can see that's what the dashed line is. I've put a trend line in there, and that really speaks highly, importantly, or illustrates the amount of sawmill closures there have been, particularly in BC, because of the beetle kill. So you can see it's dropped down to that. We're monthly trend line is now about close to 10,500 rail cars of lumber per month that are coming primarily out of Western Canada. That's down almost 2 million cars per month since 2016. That really reflects the sawmill closures. There's no lumber, there's no product to load on the cars. But what I've done on this chart is I've plotted the railcar loadings to the lumber price, and I've taken random lengths, their lumber composite price, which is published twice a week. So again, I've taken that on a monthly basis to compare month to month. And it's an interesting correlation, especially if you get into what the last few years. And this is one I use to indicate, it's a pretty good leading indicator when I think lumber prices are going to bottom. It doesn't call the peaks that well, but it definitely does historically call the bottom. And prices right now, as I spoke before, are currently $780. And that's the price for Western spruce pine fir. That's the one you see that's traded on the Chicago Mercantile Exchange and the lumber futures. So that's the that's sort of the bellwether species and price. And so we talk $1,600. I'm talking about Western spruce pine fir. So we're down to $780 as of last night. And you can see it going to the chart. Whenever the railcars bottom out, which they have appeared to do so as of last week, and have tended back up again. That there's a delay in there because the car loadings are the physical loading at the mill, and it still takes 3 to 4 weeks or a month and a half in some places to get that lumber into the marketplace in the United States, depending where it's going. But it's usually a pretty good indicator. That's where I think lumber prices will bottom out. So we'll see if this chart works, because if we revisit this a month from now, I bet you we see lumber prices back probably over $900. That's my guess. And then when just getting back to the bottoming out of prices, we've touched on a lot of areas, but you've got the Europeans turning off the tap. People are realizing, hey, the new capacity is not coming on. You're going to see, currently right now, we're seeing wildfires. And I can tell you the provinces in the states, like Oregon, Washington, and British Columbia, when they get these really hot, dry periods like we're going through right now, they shut the woods down. And so all of a sudden, you're squeezing the timber supply that goes to the sawmill. So what are the sawmills going to do? You're going to see announcements coming out in the next couple of days, weeks. We're shutting the sawmill down. So you can't, as I said before, you can't make lumber if you don't have the timber. These will be temporary shutdowns, but that will really tighten the supply again. And then as soon as people realize, the guy that's wanting to build the deck, the backyard, as soon as he realizes, oh no, this guy Duncanson says that prices are going as low as they can right now, I better start looking around for lumber because I'm going to need a project to do in the fall. And that's the other thing that really is important to look at. The building season is almost not even half over yet. Mm-hmm. So it's a very, very interesting industry to follow.
Yeah, it's a great visual there. So we always like to end the show and, what to expect in the future. We talked about how we kind of got here, and it's a lot more than COVID. We talked about what's happening right here and now in the moment, and the volatility, that happens even in 4 weeks that we've seen. So I'm going to put you on the spot with this one, John, and say what's going to happen 2, 3, 4 years out, right? So you put your thinking cap on and tell us what to expect 5 years from now. What's going to happen?
Well, when I look at the supply side, we've touched on the Pacific Northwest and Western Canada, Alberta and British Columbia in particular. I look at lumber supply coming on in the U.S. South. So continue to build sawmills in the U.S. South. It's not as fast as the market would like. Mm-hmm. One region that has ample timber to build additional sawmill capacity, but there's absolutely nothing being done right now, is in eastern Canada. We have vast forests north of where I am in Toronto, in the province of Ontario and the province of Quebec, just to the east of us. We have vast forests. Now the trees are smaller, so you're not making wide width lumber, but you can make all the 2x4s and 2x6s you want. Traditionally, the forest industry in eastern Canada has been pulp and paper driven. So whole trees just got chipped up to make newsprint and make pulp and pulp and paper products. So the biggest problem the sawmill industry and investment in new sawmill capacity in eastern Canada has been held up, unfortunately, with our two countries with the ongoing lumber trade dispute. Believe it or not, there's a duty on Canadian lumber imports. Currently, it's 9%, but it's the Commerce Department has done their next administrative adjustment, and they're going to push the duties up to as high as 20% come December. The home builders in the U.S., which is extremely large, powerful lobby group is being very active with Congress right now and saying, hey, look at this tax on Canadian lumber, we need it. So answer your question on supply going out over the next couple of years, we got to get rid of this trade area. They got to get rid of the duties. The two countries have to sit down and work out another softwood lumber agreement, whether it's quotas or price triggers. We've tried them all in the past over the last 25, 30 years, but none of this was aided by the Trump administration. I firmly believe the Biden administration is going to have a lot more, will put a lot more attention to this issue, and we'll work with Canada and try to hammer out a deal. That if we do get a softwood lumber agreement, you will see new capacity, sawmill capacity built in eastern Canada. There won't be hundreds of sawmills. It might be 2 or 3 in Quebec, 2 or 3 in Ontario, but that will help. The other thing that's going to push the Biden administration is, as soon as he's able to successfully get your infrastructure spending program through, this is very key. Even though you're going to be rebuilding bridges and roads and infrastructure, you still will need a lot of lumber. And it's lumber that's going to be taxed. If it comes from Canada, it's going to be taxed. If it's coming out of the States, it won't be taxed, obviously. So that's on the supply side. Mm-hmm. So those are all very positive. And then the other thing the other area on the demand side, even though I think it's going to be very tight supply going over the next 3, 4, 5 years, is that we have new end markets that are emerging in the lumber and in the building industry that are they're moving at a great rapid clip. And I'm referring to the mass timber construction business, which didn't exist in North America, a decade ago. It's huge in Europe. And what I'm talking about is actually having the building codes are now changing. So in most parts of North America, traditionally you could not get a building permit to build a house of wood over 3 stories tall. That has all changed with the advent of mass timber. So just mass timber, if you just picture 2x4s and 2x6s glued perpendicular to each other into large billets in a separate factory, and then they're computerized, cut up into beams, like we're talking not 2x4s, but we're talking now, 10 by 10 squares or 8 by 10 inch squares. Structurally, it's as strong as steel, but it has some huge benefits in the fact that it's a wide-ranging list of benefits, but the key benefits are it's cheaper to build with mass timber versus steel and concrete. The production of mass timber, you're buying lumber. Lumber is a very green product because you're capturing the carbon that's in the tree. So as long as you don't burn that wood, the carbon remains in the timber. So, and in the production of lumber at a sawmill, if anybody's been through a sawmill, it's a healthy place to live. I mean, apart from sawdust, which they don't have to worry about because you've got good cleaning systems now, it's a very clean, fresh smell. There is no carbon release in the manufacture of lumber. You can't say that about concrete or steel, which those industries emit huge amounts of greenhouse gases. So the environmental part of mass timber is significant. And architects and leading companies that are big on environmental issues are bending over backwards to use mass timber construction. One perfect example is Walmart is rebuilding their Bennetville, Arkansas headquarters, their head campus, as they call it. They're completely rebuilding it. It's going to be towers that are going to be anywhere between 10 and 20 stories high, and it's all going to be made out of timber. So that's that's going to be interesting to see where they get their material from.
Yeah.
And then not to belabor the point, but we have a very good example of the lifespan of concrete and steel in condo and apartment construction, with the unfortunate example that's happening right now before our eyes in Florida. Anywhere where it's turning out now, anywhere where concrete and steel buildings are exposed to salt and salt water, they're going to find that as the cause of this collapse of this condo in Florida. This is going to draw the attention of developers and contractors to perhaps say, hey, what's it going to cost to build a new condo, 20-story condo, using wood? So we've got a really interesting development happening here. So.
Yeah. The demand is, what I hear you say is the demand's not going away. There's between the infrastructure bill and the carbon neutral building options, and sprinkle in some political, tariffs. You ain't seen nothing yet, I guess, would be the message to our audience. So, John, I can't thank you enough. We've had a tremendous conversation. Your knowledge base is phenomenal. Again, John Duncanson, he's the Executive Vice President of Corton Capital, the Timber Analyst for the Corton Global Timber Fund. I can't thank you enough, John. You've been very generous with your time, very generous with your knowledge, and I know our audience appreciated it.
Thank you, Doug. And we do, we do publish. I do write a lot of articles, and we publish it on our website, which is Corton, Corton Capital, Inc., INC, all one word, .ca, not .com, .canada, .ca.
Gotcha. Yeah, hopefully our guests will go there to answer questions and get in touch with you as needed. So thanks again.
Well, thank you again.
Of course. And I'd like to thank our audience for joining us today on Uptime Logistics. It's powered by Cap Logistics. You can find more information about the show in the description below. Don't forget to like and subscribe to the channel. And please visit caplogistics.com. All right, guys, thanks for joining us today. We'll see you next time on Uptime Logistics.